and welcome to this week's market update. Sorry for the delay, we're having some technical issues to connect to the YouTube servers, but we're live now. So let's commence. Now, before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. As well, I'm going to share my view on the market, but this is made with an educational purpose, and it's not investment advice. Okay, so let's begin. All right, it was quite an eventful week. There's no question about that. So we had a roughly 48-hour trade war, and that was paused, possibly ended. So what actually happened then? Well, as you already know, tariffs were delayed by 1 month as Canada and Mexico deployed 10,000 troops each to each of their borders along the U.S. Canada, U.S. border, and Mexico, U.S. border, right? So on both of these borders, deployed 10,000 troops. And Canada also made a 1.3 billion investment. The only thing here, which is interesting, I mean, it's good that they resolved their problems, because if they wouldn't, well, we already know what happened with altcoins, and they got completely slaughtered, right? So the same thing would have happened with stock markets, and I think the dollar would have gained much more if it wasn't that they managed to pause it. But what this is interesting though, because the impact, the potential impact on the economy was massive, okay, massive. And they walked away with quite a small win, I would say, the US. In fact, I would say the biggest win was from Canada and Mexico. Let me explain what I mean by that. Well, because if you were looking at the Twitter announcement by Prime Minister Trudeau, he made it look like it was a new effort, but it wasn't. Canada had already committed 1.3 billion to border defense in December 17th. You can Google this, it's already available. It was available online, I think on the 17th of December or so. So they had already committed. The only new thing that Canada committed was the 10,000 troops, which is obviously a big number, but that's the only thing they committed that was new. In the case of Mexico, yes, 10,000, again, they committed that. But what's interesting is that they already tried that in 2019. Has there actually been any change in drugs coming into the US from Mexico and illegal immigrants because of the 15,000 they already had in 2019? And they already tested this as the Mexicans, so it's not like a big deal, if they already know how it works and tested it. So I would argue that I think Canada and Mexico were the big winners here. But we'll see. Hopefully we actually get what they want. So they want to stop drug trade and they want to control their borders, the US. I understand that, and we need to respect that. So hopefully that is being fixed now, so we don't go back to these trade wars. But what is interesting again is that he was literally bringing a sledgehammer to something you could have fixed with something much more easier. They could have probably arranged this without the tariffs, which is interesting because it went from full-on trade war to then making friends really quickly. So when we trade next time, we need to bear that in mind, that maybe the negotiation tactics from the US administration is to be super aggressive and then last minute change. That means there's a few things. Like in the case of dollar CAD, if you were long dollar CAD heading into the weekend, as we discussed was a possibility, then obviously when trading opened on Sunday last week, you would have been up nicely. But I think what we could have learned is possibly to book profits, at least half, if not the full thing, when you're sitting on a big gain based on something like this political game, which is what it was. Also, next time we have such a big move, maybe we can think twice and be like, maybe they're going to resolve this quite quickly. I'm not saying we should go and short, in the case dollar CAD, shorting that, but realistically, things are going to be resolved quite quickly. So I think that's what we can learn really. If you're sitting on a big profit on the back of these sort of political games, then probably a good idea to book half, if not the whole thing, and then just look to go long on a dip again, because whatever you have now might evaporate in 24 hours or less, which is exactly what happened with these dollar CAD and Mexican peso dogs. Now, next up, we have Eurozone that could be targeted, Euro area, and China has already been targeted, and China has also retaliated. So it's going to be interesting to see what happens next. I think the situation here between EU and the US and China and US is more of a genuine trade war. I think that's more of an actual trade war. It's not a war on drugs, it's not a war on migration, where these two countries, I mean, you can argue that obviously China, that's what the US is saying, that China is sending all these chemicals to produce drugs. So that is obviously part of it, but I think this is going to take a bit longer time, because Trump wants the EU to buy American food, American cars, which we discussed last week. It's not of the same quality. So I think it's very difficult. You can't necessarily force people to buy something they don't want, right? It's not how capitalism or democracies work. So we'll see how that works out, but that's in place. That would be bearish for the Euro USD, and also bearish for the Chinese currency, which the Chinese currency, when that weakens, Euro as well, Euro USD as well tends to weaken. So in other words, buy more dollars. Eurozone inflation rose to 2.5%, higher than the 2.4 prior and expected. Will it stop the ECB? Probably not. Why? Because the Germany is in a recession, and the whole euro area is not growing very strongly, if anything, really. So most likely they're going to keep cutting rates. Another reason to be bearish Euro USD. We have the manufacturing rebounded, but just above the 50 levels, so it's not something to really talk about. And then ISM Services dropped quite a bit. Let's see if it was just a one-off, but it dropped from 54.1 to 52.8. These numbers can be much higher. So again, this telling us a bit that US service sector is slowing down, maybe US is slowing down a little bit. Now, when it comes to the non-farm payrolls, it's a different story. So the non-farm payrolls, yeah, was slightly weaker than expected at 143K instead of this sort of 165K anticipated. But what's interesting that the prior number was revised higher from 256K to 307K. So this negated the negative impact here, because overall across both months we met target. Now the unemployment rate dropped from 4.1% to 4%. So this is obviously a big win. Labor market doing extremely good. And then wages increased by 0.5%, which is much higher than 0.3% expected. And to get a 0.5% wage growth is quite a big thing, which is quite interesting, because what's happening here is that we're moving towards the U.S. economy overheating. Like if this continues like this, it will be bad, and normally the Fed would be forced to raise interest rates. But now they're just pausing, right? We'll have more data and more comments from the Fed this week. So Fed chair is going to speak on Tuesday. Let's see what he thinks about the NFPs. And then we have consumer price figures on Wednesday. So consumer price figures are at 2.9%. You can see that it's trying to go back towards the 2% target, but it gets rejected. So it's a bit like support and resistance, really. Like before, we're sort of stuck and sort of 2-3% was the cap, and we always pushed lower. Now it's the opposite. We can't go back into the old range. So this is obviously not good news. So if the Fed is truly looking to fight inflation, they would raise interest rates, or tell them we're going to raise interest rates to spook the markets, so we get this down. But they're not, because Trump is going to be very aggressive and be very upset if they would raise interest rates, because it would undermine his idea of boosting the US economy. So probably that's not going to happen, and that's why, for example, we have gold prices just pushing up and up and up. So this chart is from yesterday, but we already pushed above here. We're at a new all-time high, and I think we can go up to that 3K mark we talked about for quite a while. I think if we go up and we go down to the breakout point or the old last week's high, I think some people are going to look to buy here. What stop orders just here. The alternative is to look for this to drop a little bit more and then go long towards 3,000. I think that's where we're heading, because they're not going to do nothing about inflation, so people need to protect themselves, so they're buying gold. And number two, Um, Trump will probably next year or so cut taxes more, and that would further fuel the deficit and further fuel fear of high inflation, which is going to drive gold higher. So I think this is sort of the best market right now to be focusing on. In terms of the Euro USD, so when the tariffs were a reality on Monday morning, the market gapped here. And then we said if we go up here, people are going to sell, which they did. So they sold here and I said stop loss here, but now we can reduce the stop loss to 104.53. And we're trading roughly here now because I took this snapshot on Sunday. And I think if we would go up to 103.44, people are going to sell again because of potential tariffs on Europe, because the fact that economic growth in Europe is very weak right now and they need to cut, and also on the fact that the labor market is very strong in the US and they would at least at one point consider to raise interest rates. I think we'll go down to 102 and down to parity, as I've been saying for many months and weeks. In terms of oil, it's a bit difficult to say exactly what to focus on right here, right now, but we're definitely in a downtrend in the short term. From a fundamental point of view, it's a bit tricky. They do want to drill much more oil and they want to become, flood the market, so to speak. But at the same time, the economy is doing really strongly. It takes a long time to pump up more oil from the ground. So the whole idea that this is going to collapse because they're going to drill more, it's a reality, something that's going to take time, a very long time. So with that in mind, I am bearish because of the technicals, but from a fundamental point of view, I'm neutral. So bearish below 77.23, and if we go up to 75.87, people probably going to sell, targeting 74. Here's the S&P, sorry, the NASDAQ 100. I need to update this here. So this is the NASDAQ 100. So what's quite interesting here is that the NASDAQ 100 has now flattened out. It's in some sort of a rectangle, ascending triangle. So you get 1, 2, 3 touch points here. If you push them down, you get a bit of more of a rectangle, and then this is a failed push. But let's make it super simple. A break to 21,972 could potentially lift this with about 6.4% to take you up to 23,386. That will make a lot of sense. And why would it also make a lot of sense? It will make a lot of sense because we have the biggest problem for the US economy at one point was trade war between Mexico and Canada, with their biggest trading partners. It's a bit like what they did in England. They decided to stop trading, more or less, so created it very difficult to trade with their biggest trading partner. So it would have detrimental impact on their economy. But that's now gone, that threat, realistically delayed at least for 30 days or so, but maybe gone forever, at least for now. Which means that it's probably quite safe now to start to consider to look to buy again. The biggest problem is going to be against the EU and China, but both of these countries are less important now. So I think maybe we can look to be bullish. The biggest problem with this view is that the Fed will probably look to raise interest at one point, which would kill the market, but not right now. So a break to this level could lift us massively higher. The alternative would be to buy at a lower level between 20,973 and 20,555. And this is Bitcoin. So Bitcoin is sort of waiting. Altcoins, as we know, have been decimated. I think we're talking about like a bear, but I mean, it is a bear market in altcoins. There's no question about that. Down with 78% some of the coins. But this is holding up quite nicely. So we could either buy between 93K and 89K roughly based on the chart. That's what I think people are going to do. I'm not saying that that's what you should do, but that's what the market wants to do. The alternative is to buy here. Break here, we can go up higher. So I think what we need to wait for here, there's going to come a couple of rumors. So when this working group that is going to decide what's next for the crypto market in the US, when they decide what's going to happen next, that's when we're going to start to get a bit of rumors, and then we can probably get something to push this to the upside. Bear in mind, by the way, that I think Eric Trump said when Ethereum was down quite strongly not so long time ago, Eric Trump said that it's a good time to buy ETH. So there will probably be some good opportunities here and buy Bitcoin, but we're waiting for this to start, because until that happens, it's going to be a difficult situation. So let me see if we have any questions. Unfortunately, I have to actually leave you, but I'm gonna see if there's at least one question. If there is, we will try to answer them. Okay, so we don't have any questions. This is all right. I want to thank everyone for watching. And don't forget to leave a hello or something like this in the chat. That helps to spread the word about this. And obviously, if you like it, you enjoy it, you come back, we'll do more of these. So it's really important to support if you like it. Thank you, and talk soon.